Hey traders, so this is my trade recap for this past week. Let's jump right in. So the first few trades you can see all open on 7/17. That was in my trade alert email from last Friday. So the first trade was Chewy, sold the 45 strike for this week's expiration. I was actually able to close it out in one day. So I opened it on Friday, closed it out that Monday, so one trading day. I got a credit of 60 cents. Closed it for 20 cents, so it gave me an overall profit of $400. Etsy was another one that I was able to close out in one day. I initially sold the 95 strike for this week, a credit of $1, closed for 0.23, overall profit of $385, and I only did 5 contracts for this one. The next one is Citi. This was a 4-day hold. I sold the 50.5 strike. I got a credit of 1.01, closed it for 0.19. Overall profit of $410. The next one was Micron Technologies. This was another one-day hold. I sold the 47.5 strike for this week, credit of 0.44, closed it for 0.14, overall profit of $300. So Chewy, Etsy, and MU, they both had a nice pop on Monday. It didn't make sense to hold them for 4 more days just to get the remainder of the credit. Because, for example, in Chewy, there was only 20 cents left in that credit. It didn't make sense for me to hold for that amount. Or even MU, it was only 14 cents. I wouldn't want to hold for 4 days and take the risk of MU dropping below my strike just to make that last $140. So that's why I went ahead and closed those out after one day. So since I was able to close out a few trades, that's when I decided to open up a new trade on 7/20. You can see I got into WDC. I only had to hold it for 2 days. I sold the 42.5 strike for that week, a credit of 0.45, and I was able to close it out and collect the majority of the profit on this one. Closed it out for 0.03, 10 contracts, $420. Also, there was something I wanted to show you guys about WDC. I took some screenshots on my phone so I could show you on this video. So when I went to go close WDC on Thursday on my mobile app, the first thing I noticed when I drilled into the option is that it showed me being down $465, the current mark for the option at 0.91, yet the stock was up 2 points, and it was 4 points, almost 4 points above my strike price. And this is one day left until expiration. So obviously that doesn't make any sense for the premium to be that high with 1 day left and for it to have been up as much as it was at that point in time. So I drilled into the option and immediately saw what the issue was. You can see that the bid was 0.04 and the ask was 1.79. So on the previous screen, this mark value, this 0.91, is the mid price between the bid and the ask. So my broker defaults the price that it shows to the mid price. And typically when you have a relatively tight bid and ask, that mark would be a pretty accurate representation of what you could close your position for. But since this is so wide, I knew immediately that that mark is not a realistic mark, that I would be able to get a lot better price than that 0.91. The other thing you can look at too, over here to the left, this 0.04, this is the last traded price. So that means that the last price it traded at was 0.04. So that's another clear indication that that mark price is wrong. So when you see this ask of $1.79, there's somebody out there with 282 contracts who is trying to sell this option for $1.79. I guess they're hoping there's some sucker out there that'll come in and buy this at $1.79 when it's practically worthless. Because again, this is expiring in 1 day. And you can see that the bid is 0.04, so someone is out there trying to buy 3 contracts at 0.04. So normally when I'm placing my order to close out a trade, I would normally put it at the mark, assuming the bid and ask is relatively tight. But anytime I see something like this, I would always put my limit order in at the bid, at the 0.04. And if I didn't get an immediate fill, maybe I would increase it to 0.05, then 0.06. I would gradually start working my way up, but I would never start at the mark of that 0.91 because you're going to get ripped off if you were to close it at that price. So just keep that in mind, that anytime you go to close, if something looks a little suspicious, or even if it doesn't look suspicious, always check out the bid and the ask and see how wide it is. And if it's pretty wide, then you need to lower your price below what the mark price is. And like I said, I would get it closer to the bid, and then you can start working your way up to that mark price if you can't get a fill. So just a couple minutes later, the bid and ask started tightening up. You can see this is at 10:06 a.m. when I took this screenshot. The previous screenshot was at 10:04. And I ended up putting my limit order in for 0.03. So if you can see on the screen where it shows the bid, 0.03, 10 contracts, that's me. That's my order sitting there at the bid trying to get filled. And you notice that it really started tightening up now. The ask dropped all the way down to 0.05. So it wasn't too long after I put this order in that I actually got filled at the 0.03. The next trade was Amazon. Before we look at that one, I wanted to play something for you guys. I'm sure most all of you have seen my video from a couple years ago, my selling puts generating weekly income. I made this video in May of 2018. I just wanted to play a small portion of this for you real quick. Everyone has that one stock that is their Achilles heel, and Amazon is that stock for me. It seems like every time I trade it, I always lose on that stock, regardless of the strategy that I choose. And this was another case of me making, a dumb decision trading it. But anyway, I put my entire profit in, and the trade went sour, and I lost that profit to where basically my account went back to my starting balance of the year. But luckily, I was able to grow that back significantly, above 200% for the year. So anyway, I thought that was funny because here I am 3 years later. I'm still trading Amazon and have a love-hate relationship with that stock because it seems to always get the best of me every time I trade them. Which last week I traded them as well and was able to make some money on them. But this week that wasn't the case. And so if you got my trade alerts that I sent out when I put this trade on, you can see here under Amazon, I said that Amazon has earnings next week and typically runs up into earnings. So I've been following Amazon for several years. I didn't necessarily look at any hard data about this. I just remember that typically Amazon, the week before earnings, will start going up. People anticipating Amazon having good earnings are trying to buy into the stock, and that obviously drives the price of the stock up. So I was banking on that fact, and also, I was picking the 3,000 strike price, which at the time was like 120 points out of the money. I think it was at the 75% probability out of the money. So between that and knowing how they typically react up into earnings, that's the reason that I put on this trade. And I ended up being right. It just so happens that I closed it out too soon, but it did stay above my 3,000 strike price at the close on Friday. So again, you can see it was a 3-day hold. I sold the 3,000, $29.95, put credit spread. I got a $1.1 credit. I closed it for $4, and I took a $1,450 loss. Now that's a big loss, but what you have to consider is when I'm put on a trade, I'm not just thinking about that one trade. I'm looking at it from the vantage point of my entire portfolio. So like last week, I had a $5,000 week. I also knew that I was going to have a decent week from the other credits that I was collecting from my other trades. So that was another motivator on top of the two things I just mentioned about the run up into earnings, 75% probability out of the money. I also was fine taking the risk of potentially having max loss. Max loss in this case for me would have been right around 1,950. So by closing it out early, I saved myself from losing an extra $500 if Amazon had stayed below my $29.95 strike price. But later in the day, it did recover to where if I'd have waited, I could have got out of it probably with a very small loss or maybe even some profit. But I'm just saying this to let you guys know that there's other factors I'm taking in consideration on top of maybe some technicals or the probabilities. I'm also taking in consideration my entire account value, how much money that I've made so far this year, and that also factors into what I'm willing to risk. Because anytime you do a credit spread, you need to go into that realizing there is the potential to take a max loss because it's harder to roll spreads, unlike my other trades where, GOS, I've been rolling this one for several weeks. If I would have had to close this out in week one, I probably would have lost $2,000 or $3,000. But I know with GOS that I can keep managing it and keep rolling, waiting for it to recover. I didn't have that luxury with Amazon. So going into that trade, I knew there was the risk of max loss, and I was willing to take that risk, knowing the other credits I would have this week on top of how well I've done in prior weeks. So just keep that in mind that when you're seeing my trade alerts, you think, oh, here's a good trade that I can do because it's a spread. It takes less margin. Maybe I'll pick just this one trade and forget about all the other trades that Mark has done. So going into this, you just have to realize that if the trade doesn't play out, you could take a max loss and there'll be no way for you to roll it or manage it or to fix it in any way. So I just wanted to point that out because, I had some people email me about this one particular trade, like, oh, what do I do? I'm going to hit max loss, and that's just something you got to be okay with. If you're not okay with it, don't put on the trade. And in this case, I was okay with losing $1,950 if it came down to that, just because of the profits I've had up to this point. I mean, that would represent like a 3% loss to my account, which I was okay with. To someone else, that could be a 20% loss to their account. So you should never take on a trade like that if the max loss is going to be a big percentage of your entire account. And real quickly, I'll just show you in a chart. This is a weekly chart on Amazon. So I'll just kind of show you what I was talking about. You can see this was their last earnings. So you can see the little symbol here at the bottom. This is when earnings came out. So again, this is a weekly candle. You can see the week prior to this earnings, for that week, Amazon closed up. We have a green candle, and it closed up. Not a lot, but it closed up for that week. You can see up in this section here where it shows the open and close. If I hover over that candle, you can see it opened at $23.89 that week and closed at $24.10. So maybe 20 points it closed up. The earnings prior to that, it was basically an even week. That's a doji candle. So even though it's red, it closed down ever so slightly. It opened at 1865 and closed at 1861.64. So it was down like 4 points for that week. If we look at the earnings prior to that, you can see here's the earnings. And the week before, we had a nice green candle where it was up that week. The earnings before that. So in this case, it did have a down week before. It opened at 2021 and closed at 1964. So that was about a 60-point drop for that week. And then the earnings before that, you can see we had another nice up week before that. This candle's the earnings, so they must have had really good earnings that week because it shot up. But the week before, it also was up. So that was kind of, again, like I said, I didn't look at this beforehand to actually see how many weeks it was up before earnings. I just remembered, again, from just previous years of trading Amazon frequently, that for the majority of the time, they were up the week before earnings. So if we look at for this week, here's a 5-day chart. I have a line drawn at the 3,000 price level. And if we look at Monday, you can see this is at 9:30 a.m. Eastern Time. It opened right at 3,000. So if my thesis is that Amazon is going to be up for the week, that means it would close this week above 3,000 to be up the week prior to earnings. So in my mind, I'm thinking it's going to be at least above 3,000 by the end of the week. And I was right. I just happened to close mine too soon. If we go look at Friday, so here at 9:30, Amazon opened down and it started falling. So I went ahead and put an order in because, again, max loss for me was 5. I put an order in at 4, not thinking that I would get a fill for when the stock being this low. I just put it in at 4, and if I didn't get the fill, then I would have waited till later in the day because there's no reason for me to go ahead and close it out for max loss now at 5. I could have waited and give it a chance to come back and try to close it out for less. But the fact that it filled at 4, that got me out. And then shortly thereafter, of course, Amazon always does this to me. It started rallying, and by 11:30, it was back above 3,000. So if I'd have just waited a couple hours, it'd have been back above 3,000, and I probably could have closed it out here for a much smaller loss, maybe even a slight profit. But then it dipped back down again, and then it came back above 3,000 and stayed relatively above it until right at the end it dipped back down, but eventually did close above 3,000. So if I would have held longer, I would have been okay. Now, the other thing, too, is my broker, they get nervous when the stock is really close to the strike price, especially a stock like Amazon that can swing 30, 40 points in a minute. So typically they would give me a phone call. They probably would have called me around 2 p.m. and just said, hey, Mark, are you watching this stock? Are you keeping an eye on this trade? We need you to close it out by 3 p.m. Eastern time, an hour before the market closes. And sometimes I'll try to negotiate with them, say, hey, can you give me to 3:45 p.m. to get a little closer to the market close so I can get some of that time value, the theta decay, out of the option. Sometimes they'll let me, but sometimes they won't because, again, they're fearful that I may forget to close it, and then if it drops below 3,000, could be at risk for assignment. So anyway, I wouldn't have been able to hold this until the close. There's no way I could have held it until right at 4 p.m. They would have probably forced me to get out right up in this area around 3 p.m., and I probably would have been able to close it out for a small profit at that point. All right, the next trade I had was Apple. So this was a one-day trade. I put it on at 723. I sold the 390, 392.5 credit spread. I got a credit of 0.4, and I was able to close it out the next day for 0.01 because the option was worthless at that point. And in those situations, I only closed out the short leg. I didn't even bother closing out the long leg because it was worthless. And 2, there are situations where I've left the long leg there and the stock recover, and I make money on the long leg as well by just closing the short. So again, there was no reason for me to close the long leg at that point. So that 0.01 was actually just the cost to buy back that short leg. And the reason I got into this trade was Apple was looking pretty weak on that day. and just some news coming out about them that had caused the stock to drop some. So I just thought, again, it was going to be hard for them to hit that 390 strike price in one day. And so that trade worked out. And I also was looking at it kind of as a counter to my Amazon trade, since they're both tech stocks. Tech stocks typically trade together. So I thought, if Amazon does keep dropping, Apple probably will too. So this would help kind of offset some of my Amazon losses. Or if Amazon started going up, Apple may go back up, but I didn't think Apple would go up as far as 390. Then I put on Chewy again. I did the 46.5 strike, got a 0.46 credit, and I thought I was going to be able to get out of this stock on Friday because on Thursday it was above my strike price, and I probably could have closed it on Thursday for 14 or 15 cents, but since it was above my strike, I thought, I can just wait till Friday, and of course the stock dropped, and I ended up having to roll it. So I rolled it to the following week, 7/31. I rolled it down to the 45.5 strike. I could have rolled it down even further, but I wanted to get a better credit, so I just rolled it down to that strike and still got a nice credit of 0.54. I mean, that's the type of credit I would get anyway if I was putting on a new trade, so that's why I did that. Because I didn't want to drop this down to, say, 44.5 and only get maybe a 5-cent credit. I wanted to have some credit for next week. Square is the same situation. I thought I was going to be able to close this out because it was well above my strike price on Thursday. And as a matter of fact, on Thursday, I could have closed it out for 0.10. I actually had my order to where I was about to submit it. And I thought, I'll just wait till later in the day and close it out, or maybe until Friday. And later in the day on Thursday, the stock started dropping, and it didn't make any sense to close it out then. And then, of course, Friday it dropped even more. So I ended up having to roll this, but I was able to roll it down several strike prices down to the 118 strike price and got a credit of 10 cents for that. So hopefully Chewy and Square, I'll be able to get out of these this upcoming week. So this week, my total profit is $855, even with that Amazon loss. And it would have been even higher if I would have been able to have closed out Chewy and Square, but I won't be able to recognize those profits until hopefully next week. And then GEOS, I still have it here. I didn't have to put on a trade for it because I rolled it last week for 2 weeks, so it's expiring 7/31. The stock has come up some, so hopefully maybe I can get out of this week. Even if it's below my 24 strike price, I may still go ahead and close it out because my initial credit plus my rolls totals 0.83. So if I can close this out for less than 0.83, I'll still make a small profit on it. It just depends on, again, how it's trading this week, if I decide to do that or not, because I'm just really kind of tired of rolling this and would like to move on to another trade. But it's not tying up a lot of my margin, but it is tying up enough to where I could put on a trade in a completely different stock if I would go ahead and close this out. And this is the email alert I sent out this past Friday showing my trades for this week. So you can see I talk about rolling the Square and Chewy, and I only added 2 new trades, one in Micron and one in Etsy. If I would have been able to close out Chewy and Square, I would have been able to probably add a couple more trades. So if you're interested in my trade alerts, just shoot me an email and let me know, mark@premiumtrader.com. If you guys have any questions, let me know. Hope you enjoy the rest of your weekend. Thanks.